Alrighty guys, welcome to today's trade review. It is the 26th of June 2023 and I have traded the US 30 today and Euro USD. For those that have not seen my prior videos, my name is Nick. I am a day trader. I trade the 5-minute chart, price action only without any indicators, except maybe a little moving average here and there. But yeah, that's what I do every single day. And today I was looking, as mentioned, at the US 30 and the Euro US dollar. I didn't have big trades today. The setups were kind of tricky, so mostly small scalps, 1.5 to 1 trades, 1-to-1 trades, nothing too crazy, but a profitable day is a profitable day. We take what we get, right? So that being said, let's start on the US 30. To quickly check that out. If we are going onto the higher time frame, we are somewhat in a downtrend. Definitely nothing there to disagree with. We are in a downtrend. However, I saw that we had some long wicks over here. Like we had 2 long wicks over here. So I definitely marked these wicks up because they do hold some importance, right? Now I'm just marking this up to give you a bit of the foundation before I jump into the trades which I took. Now, what did I see when the market opened? When the market opened, I saw a very aggressive push to the downside. And for clarification purposes, the blue session is Asia session, the purple session is London session, and I'm trading London. So when London session opened, the market pushed down aggressively. What I tend to do on days like this is I like to see 2 aggressive candles, and then I'm going on to the 1 minute and I check out if there is in the next 5-minute candle a nice entry, a good entry to take. I didn't see much, to be honest, and this entry over here was very close to this 1 hour support resistance level, key level, which I drew, so this was too close, so I did not really see anything promising. So I just let the market run and wait. Now, once we reach down here, this is this wick to the left, which is on the 1 hour. Once the price reached down here, it catapulted back up. And this is now a very important thing, which I would like to share with you guys. You can see that this is like a V shape. Okay, this is a very aggressive pullback, Now, when I see these V-shaped pullbacks, I never enter on the first candle. I always wait for a second entry. Now, what does that mean? And let me walk you through the candlestick psychology. First of all, we had this pullback from this key level to this key level over here. Then secondly, we had a supply zone. There was a nice supply zone right here. Thirdly, as I mentioned before, the type of pullback is very important. And look at the entry candles. For me, this over here, this hammer candle, this inverted hammer candle would be a nice confirmation to enter the market. So as soon as the next candle goes below it, I would enter, which I did not do because this is V-shaped pullback. On V-shaped pullback, I only use second entries. So I wait for that second opportunity. And why do I do that? Because if I'm entering right here, as soon as this candlestick breaks, and I put my stop loss above here, look what happens. Just 5 minutes, 15 minutes later, I will get stopped out right here. And this is one of the characteristics of these V-shaped pullbacks, that often they give you a nice first entry, all looks good, and then boom, they quickly stop you out, and then the market goes in your direction, giving you a second entry, which we in fact had on this stop out. Look at this beautiful inverted hammer candle also. I call it inverted hammer. Price again tried to go up, failed, cannot close, and then it pushed below. And that was my entry right here. Oops. This is the Fibonacci tool. This was my entry right here. Put my stop loss below it. Now, where was my target? My target was very simple. My target was down here. Let me show you where. As we can see, we had strong selling over here. This is a supply zone. We had strong buying over here. So down here somewhere, we do have a demand zone, right? Because there was strong buying, and I saw that, and I decided to exit around that demand zone. So that optimum exit, I think, would have been right here, but instead of waiting that long, I took it a bit earlier at the 1.5 to 1 up here. As soon as the price shot down to this 1.5, I decided to exit and take my profit, and happy day, 1.5 to 1 reward on this quick trade over here, 5, 10, 15 minutes, and that was it. Or not even that, less than 15 minutes. So yeah, that was my first trade of the day. As I mentioned at the beginning, nothing crazy, but definitely worth it. And yeah, looked nice. So second trade of the day was on Euro US dollar. And also this one was very messy in my opinion. It did not look very nice. Let's go on to the 1 hour. Now, what do I see on the 1 hour? And bear in mind, I'm a day trader. I like to scalp. So I do not necessarily draw down the overall market structure and look what's going on. I do, of course, look at the bigger picture, no doubt, but I try to capitalize on smaller moves. So the overall structure and the trend and picture does not matter too much to me, okay? Now, it does matter, of course, don't get me wrong, but not that much. Now, however, what do I see over here is that the price was pushing up, right? We had a nice uptrend structure right here. So we had some sort of a demand zone on the 1 hour right here. That's what I saw. I saw that we had a nice breakout right here. We broke below this level, we broke below, and we came down into this demand zone over here. So when we go to the 5 minute, I want you to see that we came into this demand zone and we reacted strongly to it. And how did we react? And those that are familiar with reversal patterns or patterns in general might see what I'm talking about. We had a double top in this double bottom in this demand zone right here. Apologies, double bottom. We also had over here, as you can see, a can't close, meaning you see these are the wicks of this first bottom. These are the wicks, and the second leg of this double bottom didn't even manage to get down to these wicks. It didn't manage to get down to these wicks, okay? So very nice rejections, and the market tried to push to the upside. And this is getting very interesting now because, and I'm showing you why, because this was a very interesting trap setup. But I'm jumping onto the daily time frame just quickly. Jumping onto the daily time frame quickly because we had over here a lonely swing low. Okay, I call these lonely swing highs or swing lows. Like when you zoom out, you can see sometimes on the charts that you have these lonely, like over here, these lonely swing lows or swing highs, which they hold a lot of value. In my opinion, they hold a lot of value. Whenever you see price coming to one of these lonely swing highs or swing lows, there is something happening around them. Okay, so we had on the daily time frame this lonely swing high. And if you ask yourself how do I know that, because I obviously do my pre-market analysis and I'm looking at the daily and at the 1 hour for this. That's how I knew that this was there. So I call this daily swing high, swing low. Go back to the 5 minute. Now check this out, and this is really cool. I really like that. So we had this double bottom, not the cleanest, not the nicest, but some sort of a double bottom. Now those that are familiar with the double bottoms, a nice entry on a double bottom, in my opinion, is if the second bottom gives you a strong reaction, gives you a nice good candlestick, you could either enter on the break of that candlestick of the second leg, right? Or you can wait, for example, for price to go to the upside, to then pull back to the neckline, okay? To the neckline. That would be a nice entry. Sometimes when you have these double bottoms, you have the first leg, then the second leg, and you have a hammer candle right here. You have a nice hammer candle, you know, with a long wick and a nice hammer candle. That would, of course, also be a very nice entry right down here, especially if you have the can't close setup, okay? And now I want you to quickly look at what happened over here. Over here, we had that second leg, this white candle, green white candle, depending on what colors you use. We had that nice second leg, but the candle closed up here. So the candle closed fairly high and fairly aggressive. Now the next candle could not break that high, right? It didn't break that high, so I did not have this entry opportunity. But what I saw was that the price rejected this lonely daily swing high. It rejected it here, it rejected here, and it rejected again. So it has been rejecting that high quite a couple of times. Now I was thinking that where else then at this lonely daily swing low. Where else setting a trap but there? So what do I mean with that? I mean that there was this double bottom over here, price pushed up, and check this out. Right after that leg, that second leg, this candle pushed into this daily level over here. It pushed into that daily level and it ejected it. Now this looks like a nice dejection. As soon as the next candle opened, the next candle, this one over here, broke nicely below here. So just think about it. For a lot of retail traders that are looking to trade this, they most likely entered for a short position right here. Why? Because this daily level got dejected over here, it got dejected over here, it got dejected over here, and it just got dejected again, right? So this presents, in fact, a nice short setup for retail traders. However, as soon as the price went below, it snapped back aggressively. Now, I wanted this candle to engulf this trap candle completely, which it didn't do, which was a bit of a bummer for me because I was really waiting for it to engulf. It didn't do that. However, when the next candle opened, it tried to push below, but it couldn't. And look at this. I'm zooming in as close as possible. The wick only went to down here. It could not go any lower and then push to the upside. And that was the signal for me to enter for a small long position. As soon as it broke here, put my stop loss right below this wick. I didn't risk too much over here. And from a target profit perspective, I was again looking at the 1.5 to 1 because over here we had these lows, right? We had this low over here. Now, as I told you before, obviously I do have to respect the larger structure. I have to understand the larger structure and so forth. And in my opinion, when I see this is a nice like consolidation over here, little break, and goes to the downside. So I'm not too bullish that this will come all the way back up. I'm not too bullish on that. But I realized that there might be a small scalp opportunity, and the 1.5 to 1 is good money in the bank, right? So yeah, that were the two trades of today. V-shaped pullback with the first entry trap. I would really, if I would be you and you want to be a day trader, study these setups. They're very, very cool. Very good setups if you understand the V-shapes. And then the second one was this double bottom trap over here, which I took for a long position. And that's it for today. Nothing too crazy, but these were the trades. Thank you for watching. Do subscribe to the channel if you're interested in daily day trade recaps, day trade reviews. I'm trading Forex, indices, everything. And I hope I see you in the next video. Take care of yourself.